Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had a lot of price movement and volatility in the markets with a gap higher, but then we started selling off, and all of that gave me some key messaging and signals that this near-term bounce has been mainly a lot of short squeezing. With the negative sentiment in the markets and the uncertainty that's out there, a lot of institutions were going short the markets, and any whiff of good news, much like yesterday, how Trump said he's not looking to fire Jerome Powell. And then also a China deal is on the horizon, plus 18 countries have submitted proposals for tariff deals. All of that was good news, and institutions caught that as a signal to go ahead and get out of their short positions. So that's what I'm decoding for today as to what the price action is likely have occurred so far. But first, before we get in the heat map, let's jump straight into some stocks that have earnings today so I can give you guys some levels for those that are watching live. All right, so as you see here, IBM is one of those stocks that has earnings after the bell. You see resistance if price moves up at 260.53 cents, and then support down here at 225.27 cents. Now, there is another area of resistance right here. You can see right at the pivot top of this candle here, right around 256. So in this range will be resistance should price move up. I don't anticipate IBM to really rip higher than this, mainly because on the weekly chart, see this massive topping tail that occurred back on February 3rd. So the week of February 3rd has really dictated price movement all up until this point. We'll see what earnings can do for IBM if it can get itself out of that hole. Here on Texas Instruments, we've got earnings with them after the bell too. You have a beautiful declining trend line right here that's going to provide resistance at 169.61. And then down on the bottom side, we have a longer term trend line extending all the way back to this pivot low at 139.45. So watch both of those levels if you're interested in trading after hours. Another one, Las Vegas Sands reports after the bell. Movement up, we've got resistance at 39.04, and then support's going to be down here at $30.58, right on the bottom of this declining trend line, which I do believe will catch support, at least for the near term, should this stock sell off in the after hours. All right, now let's flip over to the heat map, summarize the day. We have the Dow Jones up 1.13%, NASDAQ up 2.29%, S&P 500 still up 1.8%. U.S. oil is taking a hit, still chopping around that trend line that we're going to take a look at here in a moment. Gold continues to fall from yesterday's topping tail signal. Much to be anticipated there, all in the charts. And then Bitcoin had an awesome day today, reaching upwards of $94,000 in change. As you see on the right-hand side of the screen, a lot of green, especially for the big companies out there. Meta, Microsoft, Google, Apple, NVIDIA, all up nicely on the day. Tesla is still hanging on to its green status at the moment. And then we see some other companies that are in the red, like ExxonMobil, Procter & Gamble, Coca-Cola, some of those companies that would be more attractive in less lucrative markets and less with the markets going up, more defensive plays, they are starting to see a little bit more of an exodus. All right, so back into the charts, when we take a look at the S&P 500, this move up, as I mentioned, this last couple days is when we started having whiffs of good news, and any good news would send these markets ripping higher. And a lot of reason is what I described earlier, with several institutions short the market. Any bit of good news is going to do two things. First, it's going to bring retail investors back into the market willing to buy. But then it's also going to have these institutions cover their shorts, which is also buying pressure in the markets, helping to catapult and move those stock prices higher very rapidly. This is something important to understand whenever we have these rallies in bear markets, because they can go up and they can go up really fast, very quickly. And the reason is because you have those two components driving the pressure of buying in these stocks. All right, so back into the S&P 500, we see here that price action gapped up higher, but where did it stop and catch resistance? Right here at this declining parallel channel. Technical analysis helps guide us through any sort of reaction in the markets. As we see right here, that's coming out to play true. And then if I zoom in a little bit closer on the 10-minute chart, you can see that we gapped up inside that parallel. And right here, it was almost looking like the markets were about to rip higher, this bullish consolidation. but then the rug was pulled, giving me that insight that I provided to you that this may be more of short squeezing with people still interested in selling and getting out. Now, what needs to happen for the market to continue higher? We need to have some sort of consolidation in this area and then break above. Now, in this near-term bounce, if we do continue higher, I do think the high end and the max high end of this move is going to be the gap fill from this candle, which is at 583.06. If you notice on the chart, should we fight our way and get back into this parallel, that 583.06 also corresponds with the top end of this parallel channel, roughly at about May 15th or 16th. So that's a logical explanation and anticipation for price to continue to move higher if we still have news that breaks that is positive for tariffs. Into Bitcoin. Bitcoin had a rocket day yesterday, and then today is kind of pausing, but it's still a fantastic move on Bitcoin. And if you notice here, I've got another parallel that I've developed. So I will take this off just real quick, and I'll show you that price action ran right up to the bottom end of this parallel and paused, much like I've been describing. If we're going to move up, this $94,000, $95,000 area is going to be resistance. But what a beautiful bull flag that this is right here, and then gave us insight to this near-term pop that we're experiencing on Bitcoin. So now back to this new parallel that I found. So you can see I've made one from pivot to pivot to pivot. And inside of this parallel, it also behaves with the 50% area of this parallel very well. Price action comes up, gets rejected, tries to go up, gets rejected, came up, bull flagged right on the 50% area, and then broke out. But why I bring this to your attention, though, is to show now all the different levels of resistance moving higher for Bitcoin. So right here on the bottom end, we've already highlighted that at about $95,000. The very next area of resistance is going to be the top end of this declining parallel, right around $97,600, and then followed up by the $100,000 mark. So for Bitcoin to continue its march, we're going to need to see something similar that we had happen right down here. You see all that bullish consolidation, and very well may likely need to happen again for us to break through all three levels of this resistance. So more to come on Bitcoin in the near future. Into gold, you see here this wonderful topping tail right at the top of the charts. And the RSI was giving us the signal with this higher RSI here, lower RSI here, and then also lower RSI here, was showing that gold was topping out. Now, it could stay overbought for longer than anticipated, but this move was much anticipated. We should see right now price action come back down into the $3,100 area for gold. This is going to be the major support. And I'm on the side favoring that this is going to be major support, giving gold another bounce and potentially another leg up. This $2,800 area is very far away at the current moment. We'll see and reevaluate if price action consolidates here, pushing price lower. Into silver. Silver had a great day today. I had this bullish consolidation banging right into this resistance area, 32.87, and has now closed the day right in these pivots, right here where I said there likely will be resistance. We'll see in the coming days if we have price action curl over, gain more momentum, and then able to make another move at the next major resistance at 34.86. On to U.S. oil. U.S. oil continues to chop along this trend line, so no confirmation yet on a breakout on U.S. oil. We'll check back in the next couple days to see if it presents another pattern of any bearish or bullish insights for that. Natural gas also still hanging out right here on the support area at $3.13. Should we break through this area that is currently support on natural gas, we will come down to $2.55 on the chart. Up next, we've got the dollar. U.S. dollar has had a great rebound from this low. The previous 2 days have been very good price action for the U.S. dollar. Next area of resistance on the dollar is going to be right up here at $100.80. And if we can get through there, then we do have a fighting chance to get up to this inclining parallel channel. But right now, this is good price action stabilizing the dollar off this monumental fall that we've seen over the last few months. Now into some technical analysis and some education too. I really love bringing some insight for these stocks, price levels, key support and resistance levels for you guys to decipher and trade on your own if you want. However, I also like to bring some education element to trading the close. That way you guys can see how this is derived and start doing it on your own and make trades on your own too. This is all for benefiting the retail trader, giving us a leg up to fight these big institutions and understand how to make profits in the market. All right, so back into PEGA. Now, this company is under $10 billion. It's about $7.5 billion market cap. So it was not on my radar when I was day trading this morning. They did have earnings, as you see right here. They had earnings yesterday afternoon. And usually when I day trade, why this wasn't on my radar, I like to day trade stocks that are very liquid. And those typically fall in stocks that are 10 billion market caps and higher. So aside from that, all right, so where and why did price stop here? Well, if I don't draw anything on the charts, I see a lot of chop action right here that was going to provide resistance. All of this, which was bull flag consolidation for its move up, is now going to be resistance coming back up because a lot of folks invested in the stock here. And when the price collapsed underneath it, they're ready to get out. They're wanting to be out of pain. All right. So they were in pain down here. Price action moved up. It makes sense that right in this area, people would be willing to sell. But if I draw Fibonacci retrace, this highlights and illuminates much better why price stopped where it did. If you see here now, the 618 retrace is at $93.04. And the high today on PEGA was $93.08. So it just pierced this 618 retrace by 4 cents. Drawing these retrace sequences, this Fibonacci retrace sequence or trend lines, parallels, understanding where support and resistance can help isolate levels for you to make money. And if you flip into the 10-minute chart, you can see here, price didn't open right there. It went up into that area and then collapsed back down. And on top of that, it also put a 10-minute topping tail in right here on the charts, signifying that, you know what, this area is going to be tough for it to beat in the near term, providing an opportunity to short for a day trade and take profits on the move down. Next up, ISRG. They had earnings yesterday, and I drew here and highlighted to you all yesterday. If you want to rewatch that show, I said, hey, all right, here's going to be the resistance on the move up, and here is going to be support on the way down. By the time I flipped to this chart, price action was just underneath this. Matter of fact, price went down under 440, right around 438, and then bounced all the way back up, opening today right around $500. And if I flip into the 10-minute chart and go to the extended trading session, you can see what I mentioned right here. Price immediately collapsed under this 440 area, then ultimately rebounded, potentially giving you, if you were wanting to buy right here and hold overnight, this was a $60 gain till this morning. Incredible move on this stock, all by just knowing simple technical analysis and understanding support and resistance zones. Into another great a great chart for identifying technical analysis. You can see here, I love parallels. Parallels give us a wealth of information to go by, how price action responds to the pivot lows, when how to respond in the middle of the parallel, and what it needs to do to get back in after confirming underneath. And right now, in this day coming into the trading session, I was anticipating SMCI to move up right here into this resistance at 34.88. SMCI gapped up here, and then we'll zoom in a little bit closer to show you what happened. You can see from this move. So we closed yesterday here, and then we gapped up here, 7% up on the day, and then it proceeded to move all the way up to 14% on the day, all with just within the first 20 minutes. And so I jumped into a short trade with the members, and we took a very easy profit right here. Only had to enter and add to the position one time. So those sort of trades work out perfectly, but I was enabled to make that trade because I already did my homework and had this parallel channel on my chart sitting here waiting, telling me this area is going to be resistance because of how price action broke down here. We broke down, confirmed, flipping this area of support into resistance, and then a move up and a vertical move up. You want to see an extended move up into that resistance is going to give you an optimal probability chance of generating profit on that trade. This trade was an easy one to make today. Very happy to get it out to our members. Into Amazon. Amazon too, with technical analysis. The markets were gapping up today. Everything was moving higher on the charts. There was a lot of euphoric buying right at the beginning, thinking this was going to be sustained. And what happened to Amazon? If I scroll back on the chart, you can see this trend line derived all the way back from the beginning of 2023, connected over from pivot to pivot to pivot to pivot, and then all the way through price action here. When price broke down, again, much like the SMCI parallel, it confirmed underneath this trend line. So that now makes this trend line resistance. We attempted to break through here, failed, attempted to break through here, failed. And then now we're having an extended move back up into it. Boom, another failure. That's what happens with these trend lines. You can derive all this information simply by knowing how to draw trend lines. It's something I like to go over with everybody that's our members in the day trading room, as well as in my first educational video. I created all of that with trend lines to help people understand these are trading opportunities for everybody to take advantage of, including the institutions too that do watch our channel. Again, that wraps up Trading the Close here with me. My name is Drew Dosek. Thanks so much, everybody, for watching. And thank you so much for the comments, too. I love getting feedback about these videos and bringing you guys top-notch information. That way you can take advantage of it on your own. Look forward to bringing you some more data tomorrow. Until then, you guys have a great rest of the day. Thanks again.